has already grown too much in the last pretty much 2 to 3 years.
This is Rocky Rana from the Realta Property Buyers Agency. Today we are going to talk about Townsville. These days, a lot of our clients are asking us, why are you not buying investment properties in Townsville? Now, I've got a special guest today with me who is more technical. He is head of research, Gurminder Singh, who looks after everything in the business when it comes to researches. So this guy buys 100 plus properties in a year. So we have got him here, and he has alone bought 50 to 60 properties in Townsville, and he has stopped buying in Townsville for 6 to 12 months, I believe. Let's unfold why he has done that. I'm going to ask him tough questions. If something which I have missed and you want to ask him in the next video, leave that into the comments. So let me welcome Gurminder Singh, head of research at the Realta Property Buyers Agency.
Thank you, Rocky.
Very well. How are you, man?
Very good. So far, so good.
Alrighty, perfect. So, Gurminder, we have been now working together for 2 years now.
Yep.
And when we started initially at that point of time, not just Perth, we were buying quite heavily in Townsville as well.
That's right.
Now, most of our clients who are coming on board now, they are asking, like, why are you not buying us a property in Townsville, wherein they are seeing Facebook ads, they are seeing so many people still talking about it. The question is, why did you stop buying in Townsville? If you can explain that in first one or two lines,
Yeah.
and then we go deeper into it.
Yes. So the main reason is it has already grown too much in the last pretty much 2 to 3 years. So that's the main reason why we avoid buying now in Townsville.
Okay. And when you say grown too much, what do you mean by that?
So basically, most of the locations all over the Townsville grown pretty much 60 to 70% in the last 2 to 3 years, and it is a huge jump in the capital growth. Less likely it will be like the properties which is you can buy pretty much like 600, 650. It is not going to be like 1 million in any time soon. So
Okay.
those properties were selling close to 350, 400k 2 3 years ago. Now the same property is selling for 650, even touching 700 as well. So if we are buying at 700 level, it is going to be very hard to see the same rate of growth in the future. So that's the main reason.
Okay, but then there is a lot of pressure from the mainstream media. They are talking about Townsville is booming, and not now. Like they have been talking about it for last 6 months, 8 months. Like, why are you saying that it is not going to boom? Like when all the mainstream media is saying that it will boom.
It is booming. Actually, at the moment, it is booming. It is booming from the last pretty much 18 to 24 months, and we stopped buying pretty much from the first half of 2024. And that's the main reason, because we would like to buy something in the beginning of the cycle, not at the peak of the cycle. Because if we are going to buy something at the peak, it is like market goes in the cycle. So if we're buying something in the peak, market will face some sort of a correction, stagnation for a long period of time, and people those are buying at a peak zone, they will sit idle in the market for so long. So that's the main reason. So if somebody wants to make portfolios, they need a growth in the property, and they can only go to the other property if they will have equity from the first one. So that's the main reason.
Okay, so can you show an example of any area or any property which you had bought in the past, and then we can have a further Q&A with you?
Yeah, sure, I can do that. This is a DSR platform.
Okay.
Where you can find raw data.
Yeah.
Anybody can use that one with subscription. So this is one of the suburb called Kivan, one of the most popular suburb in Townsville. It has been in the Facebook groups, online, in the news as well for so long.
Yeah.
So let's see some numbers here. So this is a typical value, which gives you the actual reflection what is happening in the market at the moment. So this is a graph that you can see in this on the screen in my background. So the properties were selling close to 400k in.
And when was that?
It was in pretty much July 2022.
Okay.
Now we are sitting in uh, July 2025, but the data that you can see here up to by 2025. So you can see a huge jump during that period.
And
so
also, like last few months, it has gone pretty much flat.
yes, and that's the problem that majority of the buyers will face in the future if they are going to enter in the market now. To avoid this sort of a stagnation or some sort of a correction, if your strategy is to buy only one property and leave it for 20 years, then might be this is a good fit. But if you would like to buy something which will grow in value, so that's how you can extract equity and multiply your wealth bit quicker than the traditional methods, then it is not might be the right choice.
Okay, can you give an example of a property which you had bought for any of your clients?
Sure.
What was the price point it was purchased at? How much is it sitting right now as we speak?
I will show you the example on core logic. This is the property that I would like to share with you. So this is the property in Condon. The address is number 96 Golden Avenue in Condon.
This is the property you had bought for your client, is it?
That's right. That's correct. And this is a four-bedder property, and we bought it for 380K in the month of Jan 2024.
Okay.
So these was some sort of the last couple of purchases in Townsville for our clients. So I will show you the value. We bought it for 380K, and according to like online tools, the actual valuation sometimes be, especially in the hot markets, are quite higher than what it is reflecting here. So the land size of this one is like 700 plus, four-bedder property, and as you can see, the property value is close to 540.
Okay. So just go back. What was the buying price? You can show that again, please.
Yes, the buying price was 380K.
380
Yeah.
to 540.
40. Yes. If I will give you the like the approximate jump in the value. So for an example,
now this property is $540,000. What is the kind of rent this property is getting as we speak?
rent should be above 500 for this property, and the jump that this buyer got in pretty much 1.5 year is about 42%.
42% growth.
Yes,
Yeah.
that's
So,
right.
so why are you not buying if the market is still going good?
There are few reasons. There are few reasons. The first reason, as I mentioned, it has already grown way too much. Um, the rate of growth won't be there in the short term and the long term. It will keep going up with the small rate. Um, the another thing is it won't like keep growing with like a 5 6 7 or like double digits growth year by year, because there are few things that you need to consider as well. The first one is affordability and the market cycle. Affordability is also attached with the unemployment rate. So I will show you one thing which is very interesting. So this is unemployment data that you can see on the screen in Townsville. The unemployment rate was quite high in 20 March 20. It getting less every quarter, and then we were ended up close to 2.1%. That was the sort of the lowest in March 2023. Now, as you can see on the screen, it is about the recent data, and then December 24, the unemployment rates close to 4%.
Okay,
Don't
unemployment rate has gone to 4%.
Yes,
From two
from
2%
2.1% to 4%. Yes, so don't get me wrong, 4% is still a decent number, but what I want to say is the actual property prices already hit the affordability cap. So unless the resident will have a significant jump in their salaries, it will be really hard to get double digit growth in the next 12 to 24 months. And Another thing that you can also look at, we can use SQM platform. This is a free tool, anybody can use it, but it won't give you the data on a suburb level, but it will give you the data on the postcode levels. So let's see what is the postcode for Kirwan. 4817. This is the asking rent, and as you can see on the bar graph, these different color of lines shows different configuration of the houses. For an example, the dark blue line, which is already selected, it shows the 3 bedroom weekly rent, how it is performing in the past and how it is performing now. And the light blue color, it is um, depicting all houses rental prices in the market at the moment. So it is really hard to understand from the graph, but I will show you here, which is going to be a easy bit. I'm going to zoom in a little bit more, so that's how you will see it properly. So as you can see in the last 12 months, uh, the change in the rent is about 8% or plus in the last 12 months. But look at the recent number. Rolling quarter percentage change is only 0.9%. And in a rolling month, percentage change is minus 2.9% overall in houses. Majority of investors are targeting like a 3 bedroom properties. In the 3 bedroom properties, in the last quarter, it has declined by 0.6%.
Okay, and what is this decline about?
Decline, it is basically the rate of growth in the rent in the market.
So you want to say that rents are flattening out or decreasing?
uh, at some places slightly correcting, and at some places it is like a stagnation. Other important point is when you will go here, like people were initially try to go to buy the properties in the regional areas because they were getting a good yields. Like look at the gross yield, it is 4.64%.
Yeah.
I will show you another example of its neighboring suburb, which is called Condon. So I will show you the jump from mid 300s.
Yep.
To pretty much 619.
Wow.
So it is going to be like a suicide. I will call it suicide for your portfolio if you will still thinking to buy in Townsville. So I will show you the rental gross rental yield. It is about 4.81%. So don't get me wrong, this yield is not too bad, but when you will see the net number after considering your console rate is pretty high. It is pretty much close to $3,000 to $4,000 per year when you will calculate your console rate plus water.
Mhm.
And when you will add up with the high management cost, and when you will also add up with the high insurances, because some of the majority of the areas are affected by flood, so the insurances are quite high. Insurance is pretty much anywhere from $2,000 to $4,000 in Townsville. On the other hand side, if you are buying something in Victoria or other states, most of the time it is close to $1,500 per year. So the insurances are high, and when you will see the net number, it is pretty much like the other states. It is not too different from them.
So, what you're trying to say is 2 years back or 3 years back, you could buy the property for, let's say, 300, 350, under 400, and getting a rent of 500, 550 was making sense. But right now, the properties are selling for 500, 550, and getting a rent of 500, 550 does not make sense because in these areas, you already have your outgoings, which are really, really high. It could be your council, it could be your insurance.
That's right. That's right. Because back then it was making sense because, as you said, um, for the 400K properties, we can achieve like 480, 500 per week rent. But now these days, if you are buying property for 550 or 600, then yields are not there.
Okay. So now someone looking at this video could have their own investment property in Townsville. Now let's touch upon, should they sell their property now and take out their money and move to a different market? What is your opinion as a head of research? You do this day in and day out. Would you take your money out and go to some other market, or what would you do?
If I would have a capacity to buy again, then probably I will think seriously about cashing it out because the market is at the peak. And if I'm getting a decent return on the 10 or 15 or 20% that I actually invested my hard earned money, and if I already double or triple that money, this is a good return. And if I will have the capacity to reinvest it somewhere else where I will get the similar rates, then probably yes. If you don't have any plans, then it is best to have some properties in your portfolio. It will help you at the time of retirement.
Okay, but what I've heard is compounding. Like compounding plays the main game, that buy and hold. All the property gurus or the experts, or even I believe myself, that you must hold the properties for long. So why are you saying that you need to sell this property now?
Everyone is different. It is not sort of a blanket approach which will fit uh, in every brief for every person that is going to buy the property, like in Townsville or somewhere else. Every person is different. So if we need to look at the properties as a business.
Mm-hmm.
So if somebody, for an example, I will give you an example, recent example that I have had a chat with one of our clients. So he wants to follow his passion,
Mm-hmm.
and these sort of a properties was giving him flexibility and give him a choice to leave their full-time job. If it need be, they can sell it off, because once they are having 150 or 200K in their bank account, then they can utilize that money for their survival for the next 2 to 3 years and follow their passion, build themselves in that sort of a space, and generate money from that space, and then reinvest in their hard earned money in the property or something else.
Sure. So if someone is looking at Townsville and you're telling them probably it is not a good time for you to get into the market, how can you explain them what sort of markets they should get in, or where they should go and invest as we speak in July 2025?
Yes, sure, I can share my board
Mhm.
to explain the things,
Sure.
because data is really important. Data tells us two things. It will help us to understand when it is the right time to jump in the market, but it is also tell us when it is time to exit from the market.
Sure.
So it is always better to buy something when the market is at the bottom of the cycle. So that's how you will have enough room to grow. There are, I always say, there are five pillars. The first one is demand, supply, affordability. These are the three pillars that everyone is talk about. The fourth one is also a market cycle, and the fifth one, which is very very important, which is a common sense.
Yeah.
Majority of investors forgot to use that one. So
Okay.
don't follow the nerd. Please do your due diligence. Please, I know like data is really important. They are just looking at the perfect data points, every point is checked, but they forgot that what they are buying and what how much they are paying for that asset. I always say to all the buyers, data is important, but it is just half of the equation. Half of the equation is what you are buying and how much you are paying for that asset. So this is really important. Now gets back to the same question, why it is not the good idea to buy in Townsville and where they should look at. So I will draw a graph here. This is a timeline. Um, this one is price. So the market is already going from here. For an example, we are setting in 2025. So less likely it will go with the same pace moving forward. Most likely it will be like that. You will get obviously 5 to 15% growth in the next 6 to 12 months. But if you are just be happy with that growth, then you might think about to go in that direction. But if you want to buy something which is where you can find more growth, then you need to buy something here or in that area. So the idea is to buy the properties where you are early in the party. You will definitely get a once of visit, but that's pretty much it. So if you would like to enjoy the whole meal, you have to be early in the party. So that's the end goal.
Okay, so if you're not buying in Townsville as we speak, where are you looking at now?
So we are looking into regional New South Wales. We are looking into Metro Melbourne. We are also looking the properties into regional Victoria. Now we are, I know, like there are a lot of people are buying in Darwin now, but we stopped buying Darwin. We used to buy Darwin in the beginning of the year or in the last quarter of 2024. So we stopped buying there. So these are the few markets that at high level we are targeting for clients.
Alrighty. Thank you, my friend. It was nice catching up with you. And is there anything else you want to give a last advice to anyone who's looking at this?
So the last advice is again, don't chase the numbers, don't chase the data blindly. Please use the last very important factor here, common sense. So the half bet is the data. It will lead you towards the direction where you should go, but it won't tell you what you need to buy and what price you need to pay for that. So be very mindful. If your half of the equation is not right, then might be it will cost you a lot more when it comes to building your portfolios. Thank you very much. All the very best.